I wanted to wait a little bit before talking about this, but some people started asking me about it, and I'm really excited because I've been working on a new... I came across a situation which was not so simple, so I wanted to come here and talk about it. And it is what to do next when you're unsure of what's going on in the charts. I'll show you the execution orders a little bit after. And I'll also touch a little bit on something I'm really excited about, and it's a new trading plan I'm working on in order to catch some continuation moves using the risk parameters that ICT explained in one of the last episodes of the 2022 mentorship. Let's now wait for the 9:30 open. So at 9:30 we had a big push with a displacement of more than 600, leaving this fair value gap right there, right? However, because the execution is before 9:55, I would not take this one. And then what we did is that we took out those relative equal highs, which are always a good place to take out liquidity because a lot of people are selling double tops, right? They would sell here based on this top, and then either leave their stop losses at this point or go break even when we went a little bit lower. So we came back up, took out those people, had the displacement of more than 600, breaking this low and leaving this fair value. If the execution is at 9:55, I would be allowed to take this trade. Let's go with a stop loss. We need to cover at least half of this second candle. So let's go with a nice 30. And then we will go directly for at least 2.5. Just like that. So this will be the trade. So we had a little push here. Not 600, but we have this small fair value gap. But this is not a trade. And then we came back and took out all of the liquidity. And if you have overtrading problems, listen closely, because sometimes we have this urge to trade, right? And as he said it on his videos, when you come across a situation where you don't know what to do, you either stop trading or you play on demo. And this is where all your urges are satisfied. Because when you do that, you're 100% winning psychologically. Because on the first case scenario, you either win the trade on demo, then you can say, damn, I knew it would work. And be careful, don't be mad that you didn't take it because that's negative self-talk. And on the second scenario, if it is a loss on demo, you can still say to yourself that I'm happy I didn't take it. But you only need to do that when a trade doesn't fail your rules, which was the case here for me since we already took out the liquidity before coming back to my level. So I just took this one on demo. And after taking today's low, of course, we had a rejection with a displacement of more than 600 with the high right there. And then this fair value gap and this fair value gap. So on MetaTrader 4, I had this order right there because this was filling all of my rules with at least 30 to cover the next candle, or okay, 250 works in this case. You take profit right there. However, we didn't come to it, so this one needed to be removed because we just filled the fair value gap above. If you prefer to use fair value gap above, you can just go with this one, but just make sure that the stop losses cover also the lower fair value gap. This is why ICT suggests. Let's now check if this one is triggered. Yes, it is triggered in this case. Almost to the stop losses, but didn't get. And we had the nice rejection. There's a fair value gap here, but I don't think we'll go back there. And this is a nice place to talk about my other model I'm working on. It's really in development now, so I don't have a lot for it, but what I wanted this model to do is take out all of those continuation. You know, I saw a lot of times I would take just one trade at the top, then I would see all of those other legs filling those fair value gaps and then continuing back down. So I wanted to take those opportunities as well. So that's why I'm working on this new model. And ICT suggests when we're doing those multiple entries to use a pyramid risk management. which is always risking half of what you risk at the beginning. So if I was risking 1% here, I would be risking 0.5 in this case. In this case, we also had the displacement of 600. Yes, and we have those two fair value gaps. Even though I don't know if I will still be using a displacement of 600 for those second legs, I need to figure that for now, but let's go with that for the moment. So this would look like that. And go for the same take profit. Again, risking 0.5 here. And make sure you don't use an inverse pyramid because this is not stable, right? You should not risk more than what you risked at the beginning, because if this would go to stop loss, you would lose both of those profits. This is what we're doing half every time we're entering a new trade. So we would have also this one. We had another displacement with more than 600 with a fair value gap here. And even though we're coming close to 12, let's just go with this one because I don't have specific rules in here for now. Here we will need 30 to cover this candle as well. And then also go in here for a 1.77. Here will be triggered after 12. Like I said, I don't know the specific rules for this model for now. I will let you know as soon as I have, but this is what it would look like. In this case here with a risk of 0.25. And there you go. All take profits. But the only trade that I took on demo was this one. As you can see here, the execution around here. Oh, and I actually took profit a little bit lower, actually at this point. And for the continuation model, I had some pretty good results from 100k with a little bit of drawdown to 110k, so that would be nice for a challenge. I still don't have enough information to show it to you guys, but this have some good potential. And if you're still lost with which liquidity levels are the best to be taking out, check out this 90% win rate model with statistical proof and example.